we had an interaction with Vandana Hari of Platts to get a sense of what is the mood like when it comes to the investors. How are they looking this continuous slide in the global oil prices that we are seeing, while the Indian government has here taken some steps to make the most of this kind of a situation prevailing in the global markets. But what is the outlook ahead and how are things going to change? Remember, 27th of November is an important day to watch out for. That is when, the OPEC countries are meeting to take a final call if they will be going ahead and cutting their production or not. I caught up with Vandana Hari of Platts earlier, and when I asked her what is the mood outside as far as the investors are concerned, global prices continues to fall. How are the investors viewing it? Where do they see the level from here on going ahead? Then this is what she had to say.
Well, there's definitely a lot of bearishness. That mood continues, what we've seen ever since June. Basically, a lot of supply, not enough demand growth happening. And something new that has happened in recent weeks and days is quite a strengthening of the US dollar. So if you look at the US dollar index as a measurement of the strength of that currency, it was around 88 on Friday, November 14th, which is, I was just checking, close to a 4-year high. So what a stronger US dollar does is, of course, because oil is denominated in the US dollar, it brings down the oil prices, but it has a second impact as well. The purchasing power of the countries that are, especially all the emerging economies where the oil demand growth is happening, countries like China, India, obviously their currencies weaken against the dollar. So as a result, the full benefit of the lower oil prices doesn't get passed on to the consumers because in their currencies, oil has not dropped as much. But just looking at the overall mood, I think increasingly now the biggest factor in the coming days and weeks is going to be OPEC and what it does at its November 27th meeting. I guess one of the reasons oil prices got a much bigger push downward in recent days is gathering sentiment amongst the market participants, amongst even international agencies like IEA and EIA, that OPEC may not really be able to get a consensus on any significant cut in its production targets. So that, again, is, of course, definitely much more bearish for the market going forward.
Talking about this crucial OPEC meet on 27th of November, we understand that Saudi Arabia is one country which is clearly opposing, cutting any amount of production. What's your sense? Till when do you see this kind of a slide continuing and at what level?
See, right now there's a great deal of uncertainty in the market over the question of what OPEC will do at its November 27th meeting. There have been no clear signals. Whatever statements have come out of Saudi Arabia, of course, which holds sway over OPEC decisions usually, seems to point to not a very keen desire or an urgency to implement a cut. Now, again, we have to keep in mind that in the absence of any clear signals, any clear statements with regard to a cut, the market is now left to, do its own inference and see meanings in what some of the ministers are saying. Some of the statements that made by some of the other OPEC members also seem to suggest that they are not very keen to cut. A lot of the countries have said, yes, we need a cut maybe, but don't ask us to cut. So so as a result, there is an expectation that has built up in the market that there might not be a formal cut. If there is one, it will not be to the extent that OPEC needs to cut if it is to remove completely remove the oversupply from the market. So, which is about 1.3 million barrels per day is what the organization needs to cut, roughly. And if Saudi Arabia decides to go it alone in terms of, being the swing producer and cutting back, then again, the expectation is that Saudi Arabia would not want to implement such a huge cut all by itself. The organization has done away with individual member country quotas since the start of 2012. So that's seen as a major stumbling block, because now that there aren't even individual quotas, where do they start? Do they start by first allocating the quotas and then asking the members to cut? So I imagine in the coming days, this factor will could add a lot of volatility to oil prices. And once November 27th has come and gone, I think we'll probably have a clearer direction. If OPEC does throw a surprise and manages to, let's say, agree on a major cut, upwards of 1 million barrels per day, that could put a floor under the oil price slide. But as I said earlier, I think that would be a major surprise. At this point in time, nobody's expecting OPEC to do anything like that.
Right, but in the coming months, due to the cold weather, demand is likely to go up. So do you think that the demand-supply mismatch around January will not be as bad as it is right now?
See, typically in the Northern Hemisphere winter, demand for oil does go up. But the reason that is not really causing any anxiety, or certainly not even putting a floor under prices as we go into Q4 and the winter demand season, is that there is already an oversupply. So whatever incremental demand that globally we do see in the winter months will be more than adequately met. In addition to growing supplies or growing production, as you mentioned from the tight oil plays in the US, there is also a lot of stocks. And we saw the International Energy Agency report, monthly report come out for November, saying that OECD stocks have grown again. In fact, they grew counter-seasonally in September, normally a month when they are drawn down. So nobody's expecting a major uptick in prices as a result of the winter demand.
And talking about the reforms that the Indian government has unleashed in the oil and gas space, do you think these are sustainable? The government is testing the OMCs. Do you think it's going to work?
So first of all, in my personal opinion, it was a very sensible move to do away with subsidies completely, because what the falling prices had done had almost completely removed under recoveries anyway. So this is as good a time as any. In fact, it's a good time to do away with the subsidies. Based on what we're hearing from the PSUs, the oil marketing companies here, though, is there doesn't seem to be full reassurance or clarity that the government will stick by its complete deregulation should oil prices start moving up again. So there's a little bit of a wait and watch approach there from what I can see. In terms of increasing the duties on, I would say the government is really testing the oil companies now, because they have managed to pass on all the benefits of the declining crude prices to the consumers in the form of lower diesel prices. But now they'll really be tested. Will they raise the prices, as a result of the taxes? So this does cause a little bit of uncertainty going forward, but I would say, again, overall, a good measure. And increasingly, I see now people are asking, what next? Does LPG and kerosene get deregulated as well?
All right. Now, if the situations change going ahead from here on, what could be the intervention? What could be the extent of intervention by the Indian government? So, LPG and kerosene are definitely far more politically sensitive. To a large extent, so is diesel. With regard to diesel, I think the biggest worry is that how do you balance, because inflationary concerns are quite prominent in India as well, and through an increase in diesel prices, you actually push inflation even more into the costs of goods and services. Look, just again, my personal view is that
it does seem difficult right now, having deregulated diesel, to, in quick succession, go ahead and deregulate LPG and kerosene as well. So probably also at the same time, the government has bought some time because its subsidy burden has gone down quite a bit, and the easing of the diesel regulation does give the oil companies some breathing room.
What's your outlook when it comes to the demand situation all across? We are seeing a slowdown in China, and even Europe as well. What's your sense at this point in time?
Yeah, absolutely. So while, even assuming that the production starts coming down, let's say whether OPEC cuts back a little bit or the high-cost barrels start closing down, even then, I think demand is a very important part of the equation. And from what we can see so far, the macroeconomic backdrop in Europe is quite poor. Russia suffering from the sanctions, and now some analysts calling for even a recession in Russia next year. China, again, growth has been moderating remarkably. By Platts estimates, in the first 9 months of this year, their oil demand has grown by just 2% year on year. India also has been very moderate, 2.5%. So even if there is some cutback in supply, I personally don't expect a major cutback in supply, but given a small cutback in supply, the demand scenario still remains weak. Now, one might ask how long this will go on. So markets do always gradually rebalance. The watchword here is gradually. So should lower oil prices start bringing demand back up? Absolutely. Should low oil prices start curbing some of the high-cost production? Absolutely. But from what I can see, this rebalancing is happening very, very slowly.
What's your forecast when it comes to demand growth in emerging markets in the next 2 years?
Look, I'm not an economist, so it's very difficult to say. But as far as at least countries like China and India are concerned, let's look at China. The oil intensity in China is going down. So the argument now is that even if China manages a 7% GDP growth rate, its oil demand is not going to go back to the high single digits, or certainly not the double-digit growth rates that we used to see 5, 6, 7 years ago. China is using much more natural gas. Fuel efficiency is increasing. Why in China? Even in the U.S. So the U.S. economy is recovering, but the U.S. oil demand growth is less than 1% year on year. The U.S. jobless rate has gone down to below 6%. So the economy is picking up in the US, but oil demand is not picking up. Again, because of improving fuel efficiencies, substitution by natural gas. So it's quite likely that we will not return to the era when we saw double-digit growth rates in China, high single-digit growth rates in Indian consumption, or high single-digit growth rates in US consumption. As far as Europe is concerned, I think nobody is expecting a rebound, economic rebound in that region anytime soon. So overall, even if production of oil comes down, the expectations for a resumption in growth at this point are quite weak.